Welcome to Trading Lounge and the US indices, looking at the S&P and the NASDAQ. Now today's really going to be about, well, the next 2 days are really going to just be about strategy and not so much about the wave count, because we've got different wave counts and we need to play off the 2,800 level, which is a minor level, 800. So we need to be long or short based off that. But I will go over the wave counts that we've got, and of course some of them need to be eliminated as time goes on. So it's not like we're going to miss anything, it's just that strategy is going to be override the wave count, okay? So in this instance here, you know, we've got this bearish count that can't be ruled out. Yes, sure, you may think it's wrong or right or whatever, but we can't rule it out just yet. So that has wave 3 here, an A wave here, and then the B wave is an A and a B, and 5 waves for the C wave for the B wave, and then we'll be looking for 5 waves down here to make intermediate wave 4. I don't think this is the case, but we need to accommodate that. And the count for that on the 4-hour chart is basically having this top in play here now, and we're looking for this to be to move lower from here, but we'll get into this strategy here shortly. The bullish count is that we have this particular count here, where we have wave 3 here, an A and a B and a C for wave 4 already in place, and 1 and 2 and 3 and 4 and 5 here, and then we come down for an A and a B and a C. So in this particular instance, we don't come, you know, down here for wave 4, we just pull back into this particular space here. So that's basically 2 sort of bearish counts at this particular stage with that, so that's fine. So what we need to do now is go in and really just have a look at this last trend that's in play here. So I'm just going to go to the 2-hour chart here first. So this is just another way to count this as well, but not to worry too much about this. I mean, the real thing here is that what I know from experience, forgetting about the wave count, the 2,800 here is the number that this market's playing out at the moment, okay? So it's dancing across this level. Now, we've got group 1 above that, which is 10, 20 and 30, and then below that we've got 80, 72 and 65. Now I've always allowed a market to play its correction in this particular space here, and once the correction matures we can normally pick it up much earlier, but if the top of group 1 here, the 2830, becomes a tested support, well then we need to be long from that point. And then if the market is below group 2 here as resistance, well then we know that we're in a bearish trend at that stage. So it's bearish under this and bullish under that. Now that's the outside of the play, but on the inside of the play here, there's a couple of things that can play out here. First of all, I've got this count from here, which we can look at wave 1 here and wave 2 here, and then wave 1 and 2 here, and then all of the 3rd wave here, and then the 4th wave, then 1 and 2 and 3 and 4 and 5 here for the 3rd wave. So it can be counted like that, and the 38.2% retracement level for wave 4 and the wave 4 of 1 lesser degree bring it back down to group 2 here. So it's quite possible for this to move down through here and then move up here. So we need to be into wave 5 here. So we need to be mindful of this support area here within group 2. It's also possible that on a bigger picture as well, that all this is up here just for wave 1 and pull back into wave 2 at this point here. So we need to be mindful of that as well. So what we really need is a strategy to get us through all of this, and I like to keep things as simple as possible. And it's not that these trades are going, you know, we're in first of all, you know, going short, we would be fighting against the trend, the main trend coming up here. In this is how we've had it counted so far. I've had it wave 1 here and wave 2 here, then 1 and 2 and 3 and 4 here, and then wave 5 here. But I was never really happy with this particular structure moving up through here. So I think that it's possible, as I mentioned in the last thing, is that this it's possible to have wave 3 here and then have this down as an A and a B and a C for this wave 4 here, and then move up from there. So any short trade below here is at risk, as is any long trade here. So first of all, we can bring this down here, copy this segment and bring it down to here. So we could say this high here is important. So we could say that normally what you do and understand is that the 2800 area here, if the market moved up to it, it would react, which it has done. If it moved up there again, it would also react as well, but not as strongly. And then it will give the first high above the level, and then it will have some type of correction, and we can go long from these points here. So you can get a better position in here without having to get a drawdown in the account by taking this top here. The other point here is that all of this, if I could just borrow this here, that becomes the A wave here, the B wave here, and the C wave coming down here for wave 4. So in this instance here, we were looking at the low here. We can now bring it up into this space here, but the same rule applies as well. So if this I'll just draw it on here, it moves down through here, we don't want to take the breakout through the 2800. We want to allow it to be, and then we want to look at the retest here, and the retest may just continue back up. We don't know that, that's why. But if it fails back at the level here and then moves down, well, then you got yourself a trade. So that reference point low here becomes the important thing. So I'm just going to move that and put that under there and hope that you can actually see that. So yeah, you need that low to come in place, and then you need the retest there. So that would be the short trade setup. It may only get us to group 2 here, and there will be supports here and there will be bounces on here. So you need to make up your mind if you're going to take profit into this space, or you're going to try and hold out for a longer trade to the downside. If it does move lower, if it does, I mean, this length of this one here, if this is 5 waves here and an A and a B and a C here, then this length here will be roughly the same here. So there will be support coming into this space. So you do what you need to do at that particular point. Take half the money, take all of it, or if you're riding, if you think that it's going to go down further, well then you do that. But then the other place to add under here, of course, is copying this here, is having the 72 here, the 2772 as a retested resistance here. Okay, so I'll leave that there. So so that's about that. I think what we've done here is that obviously there's other counts, and I just believe that we need to take strategy. We need to take the trade signals as we see them. So if this market pushes up through the 2810, you need to be long at that point. And if the 2800 becomes the retested resistance, then you need to be on the short side. So if it's to the long side, do your normal trade lot. If it's to the short side, just take a smaller position and then look to add under this one here. So normally if you trade 5 contracts, then depending on whatever you trade, will then just take 2 here, take profit on 1 here, and that will give you sort of break even stuff. And then if it gets locked under here, then start building in your normal positions, because we'll be outside of group 2 then. Okay, this is the NASDAQ on the 1 hour chart. So we're in pretty much the same boat here. In fact, we went short under this little low through here. And of course, you may not have held through the weekend, but if you have done, then what we need to do here is we need to copy that segment here. We need to bring it down under these lows here. So if that's breached there again, you can go low there. At the same time, we need to protect those positions. So we need to bring in a stop here, so we can bring the stop lower from here, move that down into about there. So you really want to get that trade to be a break even from here on in. Okay, also look to take some profit here on the, I'll just put a little P here to take profit here, and you would only go short again here if the 73 become the retested resistance. This is the top of group 1, so this is really significant here. Okay, so in terms of it's had resistance and it's had support here, right? So yeah, if it comes down here, it will bounce off here, so you need to take that profit there. At the same time, we were going to go long up over this one here, so we can just, and we could still use that to add, well, let's just leave it there. So any breach above that, we want to be long at that point. It's as simple as that. There are NASDAQ stocks which we looked at last week, and we can even just have a bit of a look at some now. I think Twitter was one. So this whole move through here is wave 3. This is a typical sort of wave 4 here. Obviously, if you're going to go long through here, whoops daisy. And this is just having a correction at 48 here. So this is just normal profit taking number, 48. But if you're going to go long here, then you'd want to be going long above here for this. Just allow, it can drop further. That's why you need to buy new highs on this. But what I'm saying here is that these are corrective moves to the upside. They're bullish correctives that are not finished yet, you know. And I think Amazon was the same as well. So just a quick look at Amazon. We're looking at Amazon having a wave 4 pullback here because this is all of wave 3. We definitely got wave 1 and 2 here. We may have 1 and 2 and 1 and 2 here as well, and then 1 and 2 and 3 and 4 and 5. Well, I've already counted that out because I've got the line through here. So there's 2 sets of waves, 1s and 2s here. So they need to play out here as well. So yeah, they can be a bit more bearish in the next session to follow through the US, but it can pick up after that. So there's lots of NASDAQ stocks doing this type of thing here. So just coming back in here, this can also be bullish, but trading from 7,400 to 7,500 in the next, because there will be corrective patterns at 500, 5 being the second strongest number in the market. So yeah, look, that's how it pans out. This way, with the NASDAQ and the SP 500, we take the wave count in consideration, we take the trading levels into consideration, and then we take the trade setups on both sides of the markets in consideration as well. So really what we're doing here is using the robo method, and whichever way the market goes, we simply need to be on it. We don't need to be mentally locked in on a particular side without any evidence, without strong enough evidence of that. We don't have that, so we need to take trade signals. So I'll leave it at that and keep it simple, and let's see how it pans out here. But it does appear that we've got 1 and 2 and 3 and 4 and 5 here, 5 wave structure, and then an A and a B and a C here. So we can have 5 waves down to here as such here. So yeah, we can't turn bearish unless we've got that 73 there as the retested resistance. But anyway, there you go. Alrighty, cheers. Thanks for tuning in. Appreciate it.